Hi everybody, it is Saturday, July 20th, 2019. Here's a quick video to go over what happened late last week and what we need to do in order to recover. So if we are going to trade back to the upside, I'm going to make a short video here to just tell you what needs to happen. And then I'm going to make another video for the further downside thing so that you have two different places to go and maybe not have to sit through such a long single video. Okay. Positive note, we did hold a higher low against Thursday, and we did hold well above the 20-day simple moving average. I will tell you this, though, that after the bell, we did see further downside in futures, and if that gets resolved, we're going to end up breaking down through the low that we set last week at the very least. And there is always the possibility that it could be a look below and we reverse and come back up. If that is the case, this is what needs to happen. If we open and we look below the 20-day simple moving average, we really must hold above this 29.64 handle right here. This was a key spot. You can see how we made an all-time high up here late in June and how we consolidated here at the beginning of July, and we came back down and we tested this once again as well at the beginning of July. And now if we come back down again, we must hold a higher low. So we must hold a higher low at the 29.64 handle or so. This also rhymes with our 80 handle rule because on Friday we kind of looked above 3,000. We failed. We came down. We closed below 29.80. And the 80 handle rule tells us that next we should visit 29.65 to 6 up again. So if we come out of the gate, and even if we break the 20-day, as long as we hold the 29.64 handle, we just need to see that reverse. We need to see a take back of the 20-day simple moving average. That's going to be key. If we fail to take back the 20-day simple moving average, we're going to go on to further downside. But if we take it back, then we look to filling the gap to Friday's close, if there is a gap, and even if there isn't a gap, still taking back Friday's close, and then moving above 29.85. 29.85 is the halfway back point for all of July. Here's the July low on the very first trading day. This is also the first trading day of the quarter. Here is our all-time high that we set last week. So this is not only the halfway back for the month of July, but also for the quarter. 29.85. If we can trade through 29.85, we are essentially closer to the all-time high than we are to the July low back here at 29.52. Once we get through 29.85, you got to take out the 10-day simple moving average. You can see that it's hooking over. I bet you that it's hanging out right here, right above this 29.85 level when we open on Monday. So we got to bust through that, bust through 85, bust through the 10-day simple moving average, and then get through another halfway back. The halfway back for last week's range, 29.95.50, 29.95.45. Once we get through that, then we have an important edge level here at 3,003. I don't know why I still have this bar. I'm going to take this off. 3,003. This is an edge level. This is left over from here. This was the day that we got the Fed minutes and Powell did his first day of testimony before the House. This was clearly a level that you can see here. We bounced on this the day before making our all-time high. We came down here, we looked through it and closed above it the next day, and then we opened and just sort of careened through it by the time we got to Wednesday. And then here on Friday, we came back and took a look above it and sold once again. So nothing is assured. You might get a really great rally all the way back to here, make a lower high against Friday, fail at this 3,003 level and go back down. But if we take out 3,003, that's your ultimate line in the sand. And I think above there, we're going to go on ahead, make a new all-time high to, at minimum, resolve the all-time high that was set this same day here on ES. It was in the pre-market, went up to 23.50, came into the regular. You can't leave an all-time high like that sitting out there on futures unresolved with the S&P. They want to go back and they want to take care of that. And if there are more buyers there, then we'll go even higher from there. Or that could be another point where we turn around and fail. But in any case, the point of this first video is to just sort of get you through what's going to happen with the upside. So in review, in the upside camp, we must hold above this 29.64 handle, retake the 20-day, retake 85, retake 95.50, and then ultimately retake 3,003. And in here you have your 20-day and your 10-day simple moving averages playing a key role. This one is flattening out, this one is hooking over and it's going to be going lower, but if we rally on Monday, this will flatten out and will turn up again. Okay, good luck and good trading this week. If we get more upside, fantastic. Let's go on to a new all-time high and see what happens from there.